there's still booking increases. So if you look at the number of bookings, that's one of the metrics on the dashboard, is the number of bookings that are coming in. The year-over-year increase in the number of bookings across the board is significant, regardless of size. But when you take a look at how many units are coming into the market, like kind of in that larger 4 to 8 bedroom size, and you take a look at the number of bookings that are coming in, I mean, it's more difficult to balance that with the supply. And, you know, yes, there are increased bookings, but can that particular segment sustain that demand?
First half-ish of 2024, I feel like actually underperformed historical. And I think that's when everyone was like, the sky's falling, you know, everything is, you know, what was it, Airbnb bust or whatever, right? And so that's kind of what we saw in our portfolio. But then starting in like May, June-ish, that market was actually pretty strong.
Welcome to RevLabs by PriceLabs.
Hey everybody, welcome back to another episode of RevLabs. My name is Becca. I've got Sarah and John with us. This is the first episode of 2025, so kicking it off with a great market. We're going to be looking at Tennessee today. But John, Sarah, Happy New Year. How's it going, y'all?
Happy New Year.
Yay.
Glad to be back.
Cool. So if you've joined us for a RevLabs episode in the past, this is where we look at different markets throughout the US, take a look at a couple of the trends that are going on, talk about what makes them unique, some of the drivers of those markets. But usually we start with the whole country. So we're using PriceLabs STR index. You can find this on our website, hello.pricelabs.co, under resources. So we're kicking it off just to sort of look overall at the US, how things are going. And seeing it's January, I figured we'd take a look at how the market is pacing. So I'm just going to quickly change this over here. We've currently got about 1.5 million listings on Airbnb currently. And looking at these pacing charts, what are we thinking about maybe what happened in 2024 and how 2025 is starting to shape up?
Sarah, do you want to go first?
Yeah, and the one thing that I will note, just, you know, kind of being in the weeds, and John probably can attest to this too, is, you know, you're always kind of looking out, you know, what's happening next 30, 60, 90 for far future. You know, one of the things that happened, or that is happening in 2025 so far, is just a really soft Q1. And that I'm seeing that in many markets, not just Tennessee. But I mean, that's kind of how it's shaping up. And for, you know, the rest forward is looking pretty stable, pretty solid, particularly in the Tennessee markets, but also in a lot of other markets, which I think is reflecting here. You kind of got that, okay, we're looking like it's pretty stable, but that Q1 is pretty soft in a lot of different areas, which is reflected here, obviously.
Yeah, definitely. I echo that. I think, again, at a high level, what we're seeing, if we look at the RevPAR pacing, that, like Sarah said, Q1 is soft, but then we're actually seeing the Q2, Q3 actually outpacing last year, right? So, and that is something that we're seeing in lots of markets. My thesis here is that actually 2024 was, and I've said this in other places as well, 2024 is where things are kind of, that new norm started to kind of take hold, like people's travel patterns and everything with remote work and everything started to take hold. With that, a lot of the markets did not behave the way they did, 2-3 years ago. And because it was softer, people are now starting to adjust back down to reality in terms of their rates. It hasn't quite hit yet, and that's why the first quarter seems a little soft. But I think moving into the summer months, I think the ADRs are slightly lower with the occupancy, slightly higher. That's kind of the general trend that I'm seeing. And Sarah, Becca, you could say that's BS. That's BS. But that's my perspective, and that's why I say it's a thesis and it's not definitive.
Yeah, I think it's kind of mixed, right? Like I think a lot of that is definite. I think that's true, in aggregate.
Yeah.
I think obviously, you get some of these markets are still trying to push these rates, and you're just like, I don't know. It's a little tough in some markets because, and it's not just, you want to be able to set your own strategy and kind of determine what you're going to do with your portfolios.
Mhm.
But there's definitely competition out there that's got, super high rates. Still, even though, we've kind of been, chanting this mantra of like, hey, we're going to need to relax on these, we're creating too much pressure, and and the supply is creating the pressure, right? And so, those are things that, yes, we are seeing kind of a, gosh, I hate that normalization kind of thing, right? Because we've been hearing about that for so long. And it's really not normal because all of our costs have gone up. So it doesn't matter what our rates are because our costs are still so high. But I think you're right, John. I think things are settling. But I do still think there's that challenge of really, elevated rates that are out there, even into, maybe where it shouldn't be, even into like those slower months. Because Q2 for many markets is kind of a shoulder. And you've got spring break in there and things too, but like, and it's outperforming. And so last year anyway. So that's hopeful. But we still, obviously we make a lot of the money in the peak, and hopefully we can get some, additional help in the shoulders and the off. But yeah, I concur. I don't know exactly why, but we are seeing definite differences year over year.
Definitely. So switching over to Tennessee, I think we're seeing a similar story. Let me just search it. So a little bit different here, but again, similar. I think we're seeing, especially January into February, maybe underperforming a little bit. And then as we're looking a little bit further out in the calendar, it's looking a little bit better. RevPAR is pacing ahead where we were last year as of today. What differences are you all seeing in this market? If we're kind of zooming in here, it's definitely more seasonal.
Well, if you look at the RevPAR, what you're seeing is that, Q2 is where that, it's pacing ahead in Q2 in Tennessee overall. I'm going to talk from the perspective of the Smokies. I know that everyone was anticipating a slow January, historically, as well as just kind of, from from last year's experience and whatnot. And I think we're seeing that. With that said, I mean, you start looking into the summer months and it's starting to, this big of a divergence almost seems to be like, it's going to be a really hot summer. And, people who are selling out now may actually, again, I'm not saying wait till the last minute, but may actually be leaving some money on the table. It's, pacing well ahead of last year is what we're seeing.
Yeah, I mean, particularly staying in the Smokies there, completely concur. I mean, you look at, obviously some size, differences in homes, but for the most part, summer's looking really good in the Smokies so far. I'm hoping it continues. And I hope that we can capture what we need to capture with rate. That's where you can be driving a little bit of that rate is out there in the summer when we're seeing such, I think at this point, this far out, especially for the Smokies that has that shorter window, we can definitely be pushing some of that rate at this point. This is the time to do it.
Yep. Yeah. But sorry, you did mention, I think more and more, the larger inventory has been kind of, I won't say flooding, but has been coming into the market in the Smokies. So that, on the RevPAR side, that might, be showing that increase. At the same time, I think the competition on the larger properties are getting tighter because so much new inventory has hit the market over the past year or so.
That's what I'm seeing. Like when I was taking a look at these numbers, like it's all the large, particularly again in the Smokies, those larger properties, they're growing. I think that the growth rate of like, I was looking at, I kind of broke them up in chunks, and the growth rate for like the 4 to 8 bedrooms, I mean, is something like 24-25%, something like that year over year on the rolling 12. And so, I mean, just that is, you know, when it's all already is kind of it was a smaller segment, and it's growing. And so, yeah, you're definitely seeing that pressure, and we're feeling that pressure from a pricing standpoint too. So absolutely agree, John.
No, it's interesting. I think it was at DARM that Key Data presented sort of more national numbers, but they were basically saying that larger homes were kind of performing maybe not better, but more consistently year over year. I feel like we've heard that in the market over the past 2 or so years, that 1 and 2 bedrooms are maybe being a little bit more affected by that change back to normality. So I wonder if some of the data that we've put out in the market is driving investors to that segment in these markets. Overall, if we look at the number of active listings, currently it looks like there's about 43,000 listings online in Tennessee. If we look back to January of last year, oops, if I can find it, we were at, look at December, we're at 38, just under 39,000 listings. So it is a significant jump. We definitely saw the biggest jump probably between 2021 and 2022. But definitely a growing market. Maybe it's starting to slow down a little bit. But yeah, anything else that y'all wanted to talk about Tennessee-wise before we actually hop into the markets? Okay. Cool. So I've pulled 3 markets for us. This is using the PriceLabs market research section, market dashboards, as we call it. Now, this past month, we did just release something new that's, I think, is really cool. We now have predefined markets. So if you search a city like Nashville, which we'll be discussing today, we actually have a ready-made dashboard for you. It just makes things a lot easier. Before, you have to basically put in any address that you want and then generate it. And it takes a couple minutes to generate. These pre-made dashboards are ready to view like that. So it's super quick to use. But I've pulled 3 dashboards for us. So the first one we're going to look at is Gatlinburg and Pigeon Forge. Now, if you're not familiar with this market, you definitely should be. This is a huge one in the vacation rental industry. It sits right at the sort of front step of the Great Smoky National Park. So it's a huge, that's a huge draw for tourism there. You know, I think something like 1 million people are within driving distance of Gatlinburg. So it's a huge drive to market. You've got Dollywood, you've got all sorts of stuff. This is where I went to my first Cracker Barrel. So just a lot of really great stuff in Gatlinburg and Pigeon Forge. So overall, how would you all sort of describe this market? What are some things that you wanted to, you know, point out? You both have experience in Gatlinburg, right?
Yep. Yeah, in the Smokies. So I always try to speak first, so I'm gonna try.
I feel like I've been talking a lot. I don't talk very often, and so this is like my one moment to actually talk to real people. No, yeah. So this is kind of it is a legacy vacation rental market. It is, you know, it's a great draw for families, a great draw for outdoor enthusiasts. To Becca's point, I think Great Smoky Mountain National Park is like the most visited national park in the country. It's huge. So there's a lot of draws here. There's a lot of, I always used to refer to it as like, you know, like you go to a beach or like the boardwalk or whatever. It's like the boardwalk without the beach. You know, that's what this kind of area is. It's fun, lot to do. And so I think as a result, you get a very stable kind of seasonality in this market. You get the benefit of a lot of repeat guests too, because to Becca's point, it's very much a drive-to market. People come back. You can't do everything all in one. So it's a great market. I do think, like the smaller units generally make up the bulk of this market. I mean, if you break down like just by size, I think like 0 to 2 or 3 bedrooms probably makes up at least I don't know, 60% of it. I mean, but to the what we were talking about earlier, those bigger ones are kind of coming up now, like the 4+s are coming up. But historically, the bread and butter of this area has been kind of those small cabins. Again, very family friendly. And I think what we've seen kind of in the numbers when we look here at the dashboards is that, you know, those smaller units, while you've got a lot of them, even though they've seen some, you know, ups and downs in terms of kind of our KPIs and everything, we're seeing that it's still stable. I mean, you know, you've seen, if you were to just, I mean, I look on the left, there's that bedroom filter. And so what I tend to do is I tend to like look at groupings, because it's easier for me to look at trends when I'm like kind of chunking it down a little bit more, like just from a size standpoint. And then you can kind of go down a bunch of rabbit holes that way. But I think when you're looking at it from like the 0 to 1s, the 2 bedrooms, the 3 bedrooms, and you start breaking it down that way, you really see decent stability in those smaller ones. And some of that pressure that we were talking about earlier that John brought up with those larger homes, it's kind of a newer thing in this market. People are building purpose-built homes in this area, building whole neighborhoods. And so it's putting pressure on that. And so I think that's a really interesting thing about this market in general.
Yeah. So to dig a little further, or just, you know, say it in a way that I understand, that I can understand better. The pressure that we're seeing is, you know, the larger units are coming, but a lot of them are coming. So then now, you know, maybe the 3-4 bedrooms and the pricing for the larger aren't drastically different, that, you know, the larger homes are now having to compete with some of the smaller units in some areas. Is that what you were saying, Sarah? Because that's kind of what we're, you know, at first we're like 8 bedrooms, wow. But then, you know, they're not quite performing that much, you know.
Yeah, I think it's that they're not competing with like the number of booking. Like there's still booking increases. So if you look at the number of bookings, that's one of the metrics on the dashboard, is the number of bookings that are coming in. The year-over-year increase in the number of bookings across the board is significant, regardless of size. But when you take a look at how many units are coming into the market, like kind of in that larger 4 to 8 bedroom size, and you take a look at the number of bookings that are coming in, I mean, it's more difficult to balance that with the supply. And, you know, yes, there are increased bookings, but can that particular segment sustain that demand? Even though you're seeing good demand, right? Can it sustain it, because it's still seeing so much supply increase? So I think we're saying the same thing, like that pressure, that pricing pressure comes from supply growth in general. I mean, like you're kind of creating that, and that is happening at large scale in the larger homes. That's what's happening, at least from my perspective. That's how I'm seeing how that's kind of developing. You're not able to get the kind of rate that they have gotten historically because of that I don't want to say oversupply, but the supply growth.
Mm-hmm.
Yeah.
Can I touch on something else that I'm seeing, maybe not so much in the overall data, but in kind of our portfolio within the Smokies, and then we can see how the data supports it. The first half-ish of 2024, I feel like actually underperformed historical. And I think that's when everyone was like, the sky's falling, you know, everything is, you know, what was it, Airbnb bust or whatever, right? And so that's kind of what we saw in our portfolio. But then starting in like May, June-ish, that market was actually pretty strong, and it closed out. And, you know, I'm looking on a RevPAR basis. Again, that's balancing, you know, all sizes. But, you know, in some months, it actually outperformed historic, you know, 21, 22 on a RevPAR basis. And again, maybe the larger units had something to do with that. But is that something that you know, Sarah, you saw, or is it, you know, the data on the market overall?
Yeah, I would agree with that 100%.
And then so now seeing that so if you put that into context, right? So the second half of 2024 was, you know, fairly strong. and we're already pacing ahead, in 2025 for those, strong summer months. That's where, I came up with that kind of, maybe hold out at this point in time, hold the prices a little higher on on your properties in this market.
So what we're seeing on the dashboard, if we're looking at, say, June and July of last year, so June, we had a RevPAR about 240, July 272. We'd almost very similar. So June was 248 in 2024 and 271 in July. So definitely like a little bit better, but I do think that if you are actively invested in your portfolio, you are using a revenue manager like John or Sarah, you can always beat the market too. So maybe your portfolio itself saw a greater increase because you were able to identify those trends and make adjustments ahead of time instead of just going with what's going on in the market.
And I think a lot of it has to do with your portfolio makeup too, right? We can speak from a portfolio perspective and our experiences, but obviously every portfolio is different mix. I do think in general, like when we were looking at these dashboards and I was just kind of taking a look at, again, kind of chunking it out, segmenting it by size, those smaller ones, they're not like going gangbusters with RevPAR growth, but they're, the smaller ones are stable and they're growing, moderately. Some of them are more flat, but then as you get bigger, that RevPAR delta is bigger in a negative way. In general, it's tougher for those bigger properties. Again, kind of for the same reasons that we were talking about. I still think, the smaller ones are still by number the bread and butter of the market. I think that, active revenue management of them is going to continue to be success based on, who comes to this market, who's coming in and who's experiencing the Smoky Mountains. That has to be a significant and, segment that will continue to flourish. And that is, I think, being proven out by the numbers, what we've seen, year over year and what we're seeing going into 2025.
Definitely. So anything else that we also, just for those of you who are listening and watching, we just don't have time to focus on like the smaller segments within these markets. I know we would absolutely love to. If you want to create a dashboard and filter, there's two options. In the upper left-hand corner here, you can filter just by using this bedroom filter. Or you can use these filters here under the map to create more specific comp sets. So if you want to just look at, 4 through 8 bedrooms, the upper left-hand corner filter works. If you want to look at 4 through 8 bedrooms that are pet friendly and have a hot tub, you can create those comp sets right here. But let's move on to our next market, which is Knoxville. Now, Knoxville is pretty close to Gatlinburg. It's just a little bit northwest, I would say. Let's talk a little bit about this market. What are some differences that we're seeing between Gatlinburg and Knoxville?
Well, I mean, definitely it's not a heavy vacation draw. And so I think it's similar to when we were talking about Burlington and Vermont last month or the month before. It's much more kind of muted and stable throughout the year. Obviously, there are stronger, periods and whatnot, but it's, it's definitely not drawing folks for like peak season and whatnot. And so, it's a nice, nice steady flow of revenue throughout the year. And that's one of the big differences. Where here, you can make not here in the Smokies. You can make a killing during the peak season to ride out the rest of the year. Sarah, anything else?
I think she might be frozen.
Oh, can you scroll to the RevPAR?
Yeah. Where? Here?
No, down the RevPAR graph.
This one here.
Yep, average RevPAR. Yep. So, yeah, I mean, fairly consistent throughout the year. I guess it's a little, January, and then January really tends to be the slower period, but other than that.
Yeah, very stable, very stable. Definitely lower numbers, and
Mhm.
I would guess that we're not seeing some of those really large. We're not seeing any 20-bedroom homes. This is a little bit more of a semi-urban market. So you're not seeing 18-bedroom, 20-bedroom homes. That could potentially be contributing to it. But I think just overall, we're seeing lower ADRs. It's a little bit more of a, I wouldn't say budget market, but definitely not seeing the high ADRs that we do in Gatlinburg and Pigeon Forge.
Yeah, I mean, amongst the three markets, right, the Gatlinburg, Pigeon Forge, Knoxville, and Nashville, month after month after month, Knoxville is definitely the lowest RevPAR market out of all of them. And so again, I would kind of look at that market more. You probably may do similarly well with a midterm strategy, maybe not long term, but it might be kind of a midterm, short-term mixed type of a strategy market because of kind of that stability throughout the year.
Knoxville is one of those, it's college town, right? I mean, got the University of Tennessee there, so you've got a lot of different, I mean, you break down the university into kind of industry. I mean, obviously medical, and there's obviously a corporate aspect to that. So yeah, I think you're probably going to see a little more flat seasonality. You're probably going to see, I think I saw some, kind of obviously spikes around graduation. There's like a May spike there. That's probably Tennessee graduation or something like that. Again, not super familiar with Knoxville as a market, but that's kind of what I'm thinking there is like, you're probably getting the smaller units because it's the college town. You probably got a lot of incoming corporate business travelers, a lot of university related business. In addition to, anyone who's wants to vacation there. I've been to Knoxville. It's a lovely area. But yeah, kind of a completely different draw to this market.
Yeah, all those all those travel avatars that you just mentioned, Sarah, are like 30-day, 2 weeks, 30-day, that type of traveler more than the 3, 4, 5 night type travelers.
Yeah.
So
no, and I think speaking of University of Tennessee, if you look in the fall, I think a lot of the markets, if we're looking at Nashville, if we're looking at Gatlinburg, summer is really the peak, but you're seeing huge numbers in the fall. And if I had to guess, I'd say these are football weekends where everybody's coming to town, watching football games. So you kind of have this weird weekend fall peak in this market, which is fun and definitely something you want to be paying attention to. This market also doesn't really have as much growth as some of the markets. In January 2023, we had about 652. We currently have about 859, which is still decent growth, but not like the hyper growth that we were seeing in like Gatlinburg, for example. I'm coming up on time here. Do you want to spend some time in Nashville because it's a really fun market? Is there anything else that y'all wanted to talk about when it comes to Knoxville?
We can move on.
Okay. So popping into Nashville, this is a really fun market. I've gotten to go a couple times recently. There's usually at least 1 or 2 conferences a year in Nashville.
Yep.
Do y'all manage anything in Nashville, or have you looked at this market?
No, I don't have anything specifically that we're managing in Nashville, but like you've been there, a few times, and everyone knows it's the bachelor capital of the world. It almost, to me at least, it feels like the conference semi-capital of the world as well. So there's a lot going for it, and I think Nashville kind of creates a draw so that it becomes, things are coming through, on a fairly consistent basis. If we're looking again, it looks like, looking at I just like to just dive first at RevPAR before occupancy or ADR. And so if we just look at RevPAR across the board, the seasons are very, very predictable, right? So the winter months when it gets colder, that's when it's the slowest, January particularly. But then for the rest of the year, it's actually not, it's pretty happening throughout the rest of the year. And I think that is kind of like it's created, that big conference center. And so it's drawing conferences. I know when we're there are like 2-3 conferences going on at the same time. And then obviously the Bachelorette, capital of the world, the music and all that. So it's a lot more stable than one would think that I initially thought.
It's interesting. We did see a little bit of a dip last, like late summer into early fall compared to years past. So if we're looking at, July, well, actually August is pretty low. So I guess really September and October really saw a bit of a dip this past year in 2024. And I think that just comes into kind of what we were saying at the beginning, where shoulder seasons are becoming a little bit more how they were pre-pandemic. We're not really seeing that huge drive anymore. Sarah, anything that you wanted to maybe point out in this market?
I heard you talk about the conferences. Obviously, the leisure draw there is huge. Weekend warrior type of market. So yeah, I mean, I think it's a really cool market. I've stayed in short-term rentals in that market. I've stayed in hotels in that market. It's just a really interesting, very diverse area that, I mean, there are a lot of rental units there, short-term rental units. So there's diversity in not only size, but type, area. So it's a cool market. I think, it's got it's shown a little bit more, I'd say proportionally, balanced growth kind of with the kind of smaller units, kind of still a lot of small ones coming on. But as you get bigger, a little bit less. So I think that it's a kind of a stable market. I think that's what I was hearing you say earlier. And I completely agree with that.
Yeah. Looking at growth, we saw about just under 7,000 active listings back January 2023. Now we're at almost about 9,500. So pretty significant growth, but the average bookings per listing is pretty stable. It's a pretty stable, happy market.
Can you scroll up just a little bit, Becca, to average length of stay? Because I think that it's 3.
Yeah.
So again, I think it's the conference attendees, the weekend warriors, like, for 2 years solid, the average length of stay is 3.
Yeah.
So, I think that's very indicative of who is coming. Unlike Knoxville, right? Where it's the longer 2-week, 1 month type of stay.
Yeah.
This is really, transient, travelers. I don't know if I should use that word. It's kind of become a dirty word, but people coming in to enjoy the area and leaving.
Yeah. I absolutely love looking at Nashville because it's a fun market data wise. If you look at the difference in occupancy from midweek to weekend, it is so significant every single weekend. There's not like a week where maybe over New Year's people stay a little bit longer, but generally speaking, you're seeing upwards of 80-90% occupancy every single weekend, and as low as 40% occupancy midweek. Something that we talk about a lot is your length of stay strategy. So as John pointed out, average length of stay here is 3 nights. We see a lot of people that have like 1 and 2 night minimums because it is, a weekend market. You think, okay, let me just get somebody for the weekend. If you scroll down a little bit, you'll see our length of stay and booking window trends. Now, what's interesting here is there's sort of like a light peach color that is representing 3 and 4 night stays. And if we pull this back, you'll see really the majority of those spikes and really in between are those 3 and 4 night stays. So there are 1 and 2 night stays coming into this market. And if you have a 1 and 2 night stay minimum, you're probably going to get those booked. But revenue management, not just thinking about your pricing, also your minimum stay strategy. Try for a longer minimum stay, at least far out in this market. Try to fill your calendar a little bit more efficiently, and your RevPAR will thank you.
And to that point, showing up in searches is important, right? So potentially bumping up your rate so that if you do get the 1 or 2 night, stay, you're getting that bonus, add to your RevPAR. But you're still able to be, found by those who are looking for the 1 or 2 night, without, making it so that only if someone's searching for a 3 night that you're found. So
yeah,
and that 3 to 4 night, like, it's really small on my screen, but the 3 to 4 night area is pretty significant across the board, right? So that's weekday as well. You're getting that kind of, I would say, longer, I hate to say longer length of stay and call that 3 or 4 nights, but for certain markets that you traditionally think of as weekend, I mean, that is longer. So you can see where the spikes are, right? Where the shorter spikes are, and those are definitely on the peaks. So you're getting that, but you're also getting that midweek. So I think that there's real opportunity, to your point, Becca, about coming up with designing a good length of stay strategy for this market, because it's not probably what you would think just at first thought. In the Music City, it's the bachelorette week, weekend kind of thing, 2-3 nights or whatever. But it's kind of stable across the board, weekday, weekend as well. So there's probably a lot of really fun things that you can do in this market from a length of stay strategy standpoint.
Definitely. Well, anything else? I think we're just about at time. Any final thoughts you want to leave our listeners with, just about revenue management in general?
I mean, I think, again, this being the first episode of the year, having read and followed some of the national trends and things that are going on, 2025 seems to be shaping up to be a solid year, a strong year. Yeah, I like that's and Nashville is kind of reflecting that overall industry trend that we're seeing. So that's, I'll leave it at that kind of broad, generic, general comment.
Yeah, agree. I think, and I think the interesting thing looking at Nashville, Knoxville, the Smokies, they're very different markets requiring very different strategies. So, that's the kind of thing that I think is going to be kind of key to success for this year is, if you've got event spikes, if you've got, those, really high demand times that are driven by holidays or events, that's a totally different strategy than like a seasonal market, like maybe Gatlinburg, where you're kind of driving something. So making sure that you have those set and aligned, because to John's point, it's looking like a strong year in a lot of these Tennessee markets in particular, what we're talking about today. So just making sure we've got those dialed in is going to be super important to really take advantage of it, because it does look pretty positive.
Awesome. Love it. Starting off the year on a happy note. Cool. Well, John, Sarah, always lovely. Thank you so much for your insights and your brains and everything that you bring to these episodes. Looking forward to the rest of the year. If any of you listeners have any questions, doubts, concerns, please do reach out to us, support@pricelabs.co. We would love to hear from you. Thanks so much, y'all. Have a good one.
Bye.
Bye, guys.